Hello, have a pleasant day. Today's class is internal reconstruction or capital reduction. Particularly, we are going to see the specimen journal entries. I'm Srimati from Dr. Ambedkar Global Law Institute, Tirupati. Let us see. This reduction of capital can be carried out by a company in any of the following ways. In the last video itself, I have said in three ways. So let us start with by reducing the liability of the shareholders, by cancelling the unpaid amount, and then by paying off the surplus capital if anything has excess, and then the same will result in reducing the liability of the shares, and by cancelling the paid up share capital which has been lost during the course of business, and which is not represented by the asset. Actually, the asset should equal the liabilities. Sometimes the asset will not be there, only the liability, so that's why it should be cancelled. So this is the most common method which has been adopted by a company to write off the large accumulated losses. So what are the accounting entries means? When the liability of a shareholder in respect of the unpaid amount on shares which has been held by them is reduced, then the share capital, that is partly paid up capital account to debtor, this is for dummy amount, and then to share capital, this is fully paid up account. So in such a case, the paid up share capital for company remain unaffected. So when the surplus capital, if any, then which is much in excess of needs of the company is paid off, then share capital account debtor to shareholders account, then shareholders with the amount of refund, and shareholders account debtor to bank account. So in such a case, the paid up capital of company will be reduced by the amount which has been paid off. If the paid up share capital which has been lost in the course of business is cancelled, it can be done in different ways. If the face value of share is changed by reduction of capital, then share capital account, that is with the paid up value of old share, then to share capital account, this is new account, how much the paid up value. Say for example, the old share capital is rupees 80 per share paid up, means here the new capital rupees 60 per share paid up. So the balance goes to capital reduction account. So if the face value of the shares remain unchanged by the reduction of capital, then share capital account debtor with the amount of reduction to capital reduction or reconstruction account. So this term can be given by the problem. If they are asked to prepare a capital reduction, then you can prepare with capital reduction, or there is about a scheme of reconstruction means, then you can use this word scheme of reconstruction account. So the net effect of both the cases will be the same. Then if the debenture holders and creditors also make some sacrifice towards the reconstruction, and such a case, the debentures account to debtor or sundry creditors account to debtor, how much they are sacrificing to capital reduction or reconstruction account with the amount of sacrifice. If the value of asset anything is appreciated, that is the value of asset when it has been revalued, it's increased, then the respective asset account. Say for example, if building account is, as per the balance sheet, it is 4 lakh, when it has been revalued it is 4 lakh 50,000, then the asset is appreciated, that 50,000 goes to capital reduction or reconstruction account, so with the amount of appreciation. So this is about what I said. When the accumulated losses and fictitious assets are written off, and overvaluation of asset is written down to the present values, then a capital reduction account, since this account has been debited because already we have credited with the values of share capital and creditors debentures like, so with the total amount, then profit and loss account, to goodwill account, to trademark account, to patent, to plant and machinery. This is for written down value of asset. So as the case may be, whatever it has been given in any point or all which has been given in the balance sheet, that should be taken into consideration. And after doing it, when you prepare a capital reduction ledger account, you come to know there is about a credits and debit. And in such a case, if anything is left over, then the surplus should be transferred to capital reserve account. The capital reduction or reconstruction account data to capital reserve. So as if I am saying, when it is about cannot exceed the amount available in the capital reduction account or reconstruction account. After this, we have to prepare a balance sheet. So what are the points to remember means while preparing the balance sheet of the company after reconstruction is duly carried out. So what are the thing is particularly the word unreduced should be added to the name of the company while you are preparing the balance sheet. If the court so directs, then it should be compulsorily kept it. And so far as fixed assets are concerned, the amount written off under the scheme or reconstruction must be shown for the 5 years. So this is about the most important thing while preparing the balance sheet. Hope you understood. Stay tuned until the next. It's bye from Srimati. Thank you.